Okay guys, welcome back to the channel. Thanks for tuning into today's video. It's great to have everyone here. I hope everyone's having a fantastic day. We're going to go ahead and talk about Bitcoin today. Now, Bitcoin has come down and retested the 9-year multi-year trend line. That support, that uptrending trend line we see in the chart right now, the support line that has marked the bottom on 2 instances confirmed and a potential third instance, which we believe is the bottom again in 2022. We gave this update a while ago, and of course this is our free channel over here. If we scroll down, we're talking all about this move for the last few weeks. A move down to retest the 9-year trend line before we push up and break through that 23.8k resistance in October. And we've seen that. We've seen that move down. We've retested the trend line. The question is now, are we holding it? Are we going to drop lower? If we drop lower, where do we go? If we do drop lower, what will confirm that that trend line is lost? All those cool questions we're going to be answering into today's video. And of course, guys, if you're interested in our VIP channel, you can go ahead and contact me. We have a 35% off memberships at the moment. We only have 12 spots remaining. We've already had 13 spots taken in the last 24 hours. So only 12 spots remaining. And of course, this is our VIP channel here. You get updates on all of our trades, analysis. These are all of our trade signals over here. We've had significant profits in the last 24 hours. And this month alone, let's go ahead and take a look how many trades we've done in VIP. We've done about, here it is, 29 trades, 23 wins, 6 losses. So huge profits there for VIP. And you get updates and access to our scalping channel and our whale chat over here. For all our members, you can talk about everything you want, trade signals, analysis, scalp trades. We've done about 70 scalp trades in there in the last week, only 5 losses, huge profits all around. Anyway, let's go ahead and get into the video because that's what we're here for. So Bitcoin has come down and retested this trend line. Now, we've talked a hell of a lot about this move down. I'm going to go and draw it out. This move down, we've talked a lot about it. We've talked about it for months. We've talked about it for months leading up into it. If we go back to our analysis over here, you can see we're right on the money. We've talked about that enough. The question is now, is this the bottom? Is this technically going to invalidate the bottom? Because as we currently stand, the bottom is sitting around here, 17.6. Okay, 17.6. This was on 18th of June. This is the current bottom. Now, the question everyone's thinking, if we lose this uptrending support, will we make a new low? Will we make a new low below the 17,600 point and actually invalidate that point and head lower? So we're going to try and answer that question today. So to do so, we need to take a look at this chart. And we need to set a premise of the trend line. We need to understand what we're dealing with, understand why it's important first, understand the implications of it, and then we can kind of build our analysis of that. So first and foremost, why is this trend line so important? Well, the trend line itself isn't technically important. It doesn't really matter if we lose it or we push upwards, because we're going to profit no matter what. We're going to trade the trend. We're going to make money no matter what. Even if we lose the trend line now, we bought 18,000. We're still up a decent amount on our purchase. The trend line is significant because it relies, or should I say, it provides predictability in market movements. Trend lines indicate points of support and resistance. Generally, those support and resistance levels indicate reversal points, and reversal points allow us to purchase the bottom and get that next move upwards, that swing upwards. It allows a trend to be predictable. So if we lose this uptrending support line, we're losing a 9-year or multi-year predictable uptrend, and it becomes a little harder then from there onwards. How low will this move go? Will we get back above the trend line? What happens next? It confuses that macro a little bit more, makes it a little bit harder. Will it throw off the 4-year cycle? That's another question. So for anyone wondering or anyone thinking, I want the trend line to break, I want the trend line to break, you need to zoom away from your personal bias a second. Awesome, you're in a short, you want your trend line to break so you can make a 20% profit, whatever. If that's your stance, you got the wrong stance, okay? It shouldn't be about, I want it to break so I can profit, or I want it to break because I want to buy 10K, I want it to break so I can buy 9K, I want it to break so I can go here. It's not about what you want, it's about what the chart suggests. And what the chart does suggest, it suggests that support is support until it is not, okay? Resistance is resistance until it is not. And that same premise what enabled us to sell the top, okay, and look to buy the bottom. All right, resistance is resistance. The same mindset people had up here, saying resistance is not resistance, it's gonna break, is the same mindset people are having here, saying support is not support, it's gonna break. Now, yes, there are a multitude of other factors that are encompassing the market right now, economic stance, the whole range of things that are influencing people's decisions. But in reality, if we're taking a look at the objective facts of the chart, if we're taking a look at the data, taking a look at the chart, it suggests the bottom is at this trend line. Now, if it's not, we go lower. We talk about that later. But what you need to look at right here is you need to look at this trend line and say, it's marked a bottom on other occasions. I should now expect this to be the bounce point. And if it's not, then I will act and have a plan accordingly. Okay? If you're saying I'm betting on it dropping below and I don't have a plan for what to do if it goes up, you're just going to get wrecked. But if you have a plan for what it goes up and you have a plan for what happens if it goes down, you're in a position to capitalize on both movements. Okay? So the bottom is important. That trend line is important. I think a lot of people are, I guess, like brushing it off to the side almost and just saying, I want it to go lower because I want profit. I want it to go lower because I want to buy 12,000. I want to buy 8,000. It's not really about what you want. It's about what the chart suggests. And the chart does suggest, well, we've marked 2 occasions here, guys, and we're marking another one here. Okay, that's all it suggests. Okay, let's take a look. So on the larger time frame, of course, we've got a few indicators suggesting that the bottom is in. And that is, of course, our hash ribbon. Now, we talked about the hash ribbon already, and I'm not a huge fan of the hash ribbons, but of course, it does mark it. And then obviously the bigger one, which is a pi cycle bottom, indicating a pi low. And these are pretty significant indicators because we've marked the tops and the bottoms with precision. And if it doesn't do it this time around, it really questions the validity of this indicator in terms of, how accurate is this indicator going to be in the future if you're utilizing this indicator to predict the bottoms. We personally are not. We're using trends, but if you are using this indicator, it can throw it off. So us losing this trend line is significant. It will throw a lot of spanner in the works. It will muddle a lot of people up, and it will confuse a trend on the macro a lot. And we'll talk about what will happen in a second if we do go below. But let's talk about first and foremost what we expect that could happen here. We do expect something like this. So either we're going to see a bounce here and a continuation upwards like we talked, okay? And of course that resistance range here is going to be that critical resistance. This gray box is that critical resistance that we do need a break to get some momentum upwards, and we'll talk about something else in a second. But if we do lose this level, the bottom is no longer the bottom only once we have lost that low. So this low is sitting here. The bottom is no longer the bottom once we lose this level. Now we do expect, or we can expect, should I say, if we do lose this trend line, we can expect a move to the lower end of this range, which is sitting around $16,000. Okay, that is possible. We could push into that lower range and push back in. That is possible, okay? I would only be concerned about this trend line being lost if we lose 16,000 and we lose the trend line on the weekly time frame. That is it. If we see a fake out below, doesn't matter. If we see a drop down for a few days, doesn't matter. Lose 16,000, lose a weekly candle below, that is when I'm going to say, okay, trend line is officially lost. We're targeting lower levels. Our lower levels are gained at 13,000, 12,000. Okay, simple as that. Let's talk about the macro. Let's talk about the shorter time frame, but still kind of the larger time frame that makes any sense. We'll go to a daily. So this is where we're currently standing with Bitcoin. And of course, we're broken out of this macro, downtrend over here. Broken to a downside of this little downtrend formation, this bearish ascending channel formation, and we've come down and retested, and we do have major support below us, 19,000, 18,000. And that 19,000, 18,000 support is currently sitting below the 9-year trend line, but as you can see, it is still major horizontal support. So that is why I'm saying we could potentially lose that trend line temporarily, come down, retest the zone, and then push back into that trend line. That is definitely a possibility. What I would only be concerned with, like I said, is if we start closing weeklies below, or we start getting below 16,000, that is when I'm starting to get a little bit concerned that we've actually lost that trend line, okay? And I just want to objectively state this, is I don't really care where the price goes. It doesn't matter to me. Like I said, we predicted this entire move downwards. We profited this entire move downwards. We profited the entire move up. We do, as you can see from our VIP channel, we had 29 trades this month. We had only, 5 losses. We've had significant profits every single month. It doesn't matter. I don't care where the price goes. The only reason why I tell you guys this stuff is because it's interesting. People like to hear the macro. Personally, as a trader, as a scalp trader, I actually only trade on the minute chart and maybe the day chart at max. I don't look at the macro too much besides doing these YouTube videos. It doesn't actually concern me. I've got no interest. I'm purely doing this to give everyone an update, make sure everyone's in the loop, as people like to hear it. So when we're taking a look at these charts, it's very important to understand that regardless of where it goes, if you know how to trade, That's all that matters. It doesn't matter where it goes, because what decisions actually make you money? The decisions that make you money are the decisions you make now, not the decisions you make in 5 weeks from now. Okay, if you want to make money, if you want to profit in this market, you need to be looking at the scenario in front of you. You need to be looking at the situation, and you just say, what can I do right now? What can I do now to make me profit, to make money? And you make those decisions. Those decisions you make every day compound and give you obviously profit. It makes you go forward. Okay, if you're sitting around saying, I'm only going to buy at $18,000 or $10,000, you're sitting out in the market for potentially weeks or months. You're missing profit. You're missing opportunity costs because you aren't doing anything. And who says you're going to buy at 18,000 or 10,000 or whatever? So many people at 64K said, I was going to buy 30,000, got to 30,000, nothing. Then I'm going to buy 10,000, got to 30,000, nothing. I'm going to buy 18, got to 18, nothing. Even my channel, guys, I was telling you guys to buy $18,000 for months leading up into it, and very, very few people actually did. So here's another statement. Just because it goes down, what are the chances you actually capitalize in the bottom? I've said this before. If you can miss a 46% move upwards, what suggests to you that you're going to be able to catch the bottom when it's in? You're not going to be able to. If you can't see a 46% move up, you're not going to be able to see the bottom. It's simple as that. So take it one day at a time, take it objectively, don't rush into your trading, be patient, but also make sure you're making decisions today that are going to benefit you in the future. Don't sit down and be like, I'm just going to wait for this price range. And then if it never hits, you're like, okay, I was waiting for $4,000 and I never got to $4,000. Now it's back at $28,000. Do I panic buy? And then they panic buy and then it crashes. So you have to make decisions, as you go. But let's take a look at something else. And I think I want to talk a little bit more about this, obviously if we go down, we'll talk about what happens if we go down, yada, yada, yada. If we do lose that 9-year trend line, weekly close, $16,000 loss, 13,000 is the target. Of course, 13,000 is the target. Now, if we do push upwards, of course, we do need to get back above this major horizontal resistance range, as you can see in the chart here, which is that gray box. And that gray box is that major trigger for the next move upwards. And the next move upwards would be a move into this next major resistance zone. This next major resistance zone, as you can see, is now lining up with about $30,000 horizontal vertically from where we are. If we extend that to maybe October, it's going to be sitting around 25,000. And of course, it's a declining trend line, so it's going to decrease and decrease. But the major zone we do need to push up above is $28,000 to $30,000. If we're able to push up above $28,000 to $30,000, we will have a little good shot at pushing upwards into this range here. And of course, we do need to flip that range. And finally, flipping 48K will send us into a bull market, okay? So we break this macro bear market, we break this downtrend when we finally break out of this diagonal trend line. That is when the downtrend is officially broken. If you are waiting for the safest time to buy Bitcoin, you want to buy it when that trend line breaks, confirms the retest, and pushes upwards. That is the safest time to buy Bitcoin. If you're looking for a good low entry with a great risk reward, you're looking to buy Bitcoin within this range or on the 9-year trend line, okay? And that doesn't say it's 100% going to go up. Nothing is guaranteed. Nothing is guaranteed. But as you can see, those who bought the 9-year trend line down over here, we saw a 46% pump. 46% pump is not insignificant. Not insignificant at all. Even those who bought there are still up 15% on their investment, which is still significant, okay? So guys, let's talk about the economy, because the economy is that one thing that is hindering Bitcoin, or what should I say, a little bit better, is, I would say, causing a lot of fear in the market. A lot of people expecting the prices to drop on the basis of the fact that the economy is very, very weak, not doing very, very good. And that is kind of like the driving factor behind the idea that Bitcoin is going to go lower. And I 100% agree with that to some extent. Like I said, I've been talking about this stuff well before anyone even on YouTube was even talking about it. We were talking about this stuff in relation to crypto before anyone else. This is how we were able to predict the top. We use this information. So a lot of people are saying, well, you're not taking into consideration the economic information. You're not going to get the bottom. It's like, what do you mean, bro? We were talking about this stuff at the top before you even knew it existed. We've been telling everyone about this before you even knew it existed. So I don't know what people are trying to say. This is the thing about YouTube. Everyone thinks they're some kind of expert now because everyone knows what an interest rate hike is. It's ridiculous. Anyway, Keep it nice and simple today, guys. Inflation has been increasing. Obviously, interest rates go up as a countermeasure for that. Because of that, debt to service ratios get worse. Interest on debt rises. Companies have to sell assets to increase their cash flows to make their companies look more favorable. As a result, asset prices fall. Okay, then you have household available cash flow decreases as cost of goods rise, which means these households are now saying, okay, we're not risk on, we're going to start selling our assets, we're going to start not investing our money into crypto, whatever it is they're buying, you know, crypto stocks, to reduce their, obviously to reduce their risk in the market, okay, but they don't have the available cash to even do so as their obligations are higher. Whether it be food's increasing, rent's increasing, oil's increasing, whatever it may be, they're spending more money, they have less money to spend. Now, we're at a situation as of last month where, or should I say I think it was around July when they said, okay, you know what, we're bringing interest rates up less than expected. It's only going to go up 0.75. And I think that shocked the market. A lot of people were expecting it to go higher and interest rates are going to keep going higher. But I want to talk about this in a bit more detail because a lot of people have a massive misconception about what this means. And they're like, a lot of people are thinking, including a lot of my close mates and a lot of analysts are thinking, why did the market go up to $25,000 when interest rates rose? Why did that happen? I didn't expect that. I thought we were going to crash. And I think a lot of people were expecting it to crash. But you have to understand how financial markets work. You have to understand what drives money from cash into assets. And we're going to take a look at the DXY real quickly. And you can see as the DXY rises, we have money flowing out of assets and into cash. Okay, as the DXY drops, we have money flowing out of cash and into assets. These are risk assets. Okay, so it's a good representation right there, visual representation of what we're about to discuss. So, inflation has been going up. Interest rates are the countermeasure to help reduce inflation or bring it back down. Okay, so if they're going to go ahead and decrease the rate of which they're increasing interest rates, meaning that from going from a 1 basis point hike to a 0.75 or a 0.75 to a 0.5, what it suggests to the market is that inflation is not as big of a threat as it was previous to this hike, or that it is closer to the top than expected, or that is under control. When the market receives information like that, it takes that as a positive. It says, okay, we expect that inflation is decreasing. Now the risk is back on. The return on investments are now favorable. Remember, no one is trying to catch the point of reversal in the economy. Financial markets move prior to that. They front run it. So whenever there's a glimmer of hope that the market, the economy is going to spin around favorably, asset prices, particularly risk asset prices, will start to move. And it is exactly what we saw, and exactly why we saw a 46% pump, and exactly why we were able to catch it, because we understood how that works. There's a bit of a difference, okay? Everyone expected, oh, we're going to keep going down because actual systematic risk has increased. Although actual systematic risk has decreased because we did have a higher basis point attachment, meaning that even though the actual rate of increase decreased, the actual interest rate itself increased, therefore the systematic risk actually increased. The perceived systematic risk, so what people perceive the risk to be within the market, has decreased as they expected interest rates to continue to fall as inflation is near the top. Okay, and therefore this whole situation is reversed. Money has flowed back into risk assets, prices went up. Okay, it's not a fake out, it's not a bull trap. It is nothing to do with that. It is completely to do with how money flows between assets. Now, September is going to be a big month. And why am I talking about all this? Because, and I want to find this quote. I don't think I'm going to be able to find it actually. I might have to post it on Twitter. But I think it was from the last FOMOC Minute meeting. They talked about how they expect September to potentially have a 0.5% basis point hike instead of a 0.75. Do you see how that if they have a 0.5% basis point hike, the exact process we saw happen prior to this, where we saw this 46% pump, we will see that again. We will see that again. Okay, so this is what I expect to happen, and this is a bit of a long shot, a bit of a Hail Mary per se. I think it's very speculative. I don't think take this by any advice, but just think about a possibility. I expect that we'll see about 2 weeks of potential choppiness, maybe a move downwards out of trend line to around 18,000, maybe 16,500, retest, push upwards. Potential, all right? Potentially, if we lose our trend line. But if they announce 0.5%, I think we flip around, okay? And I think this month, September, is going to be a very telling month for the market. Incredibly important month for the market, because September is usually an incredibly bad month for crypto. And I actually want to show you this. Hang with me for 1 second while I go ahead and bring this up. Let me see if I can find, this might be a little bit tricky. I don't really know where I'm looking at. This might be it here. I don't know when this was posted though. 15th of August. Here we go. Okay, hopefully you can see this. December's cut off a little bit, but you can kind of see it red. Okay, so September. We can see September over here downwards is traditionally a very poor month for crypto. In fact, it is the worst month for Bitcoin performance over any other month in the entire year. And this has been relevant for Bitcoin, since inception. So is it bold to say Bitcoin is going to have a red September? No, it's perfectly acceptable. We can expect Bitcoin to have a red September. We have to be prepared for downtrend in September. Now, it doesn't mean that downtrend will last the entirety of September. It just means we can potentially see a move down in September. So important to keep in mind, guys. Obviously, we have a few things of information here. We have historical data suggesting that September is going to be a red month. We have the potential threat from the Fed and the economy worsening. And we have that 9-year trend line potentially being lost. I think September is a very high risk month. I don't think now is the time to be buying anything long term, besides potentially looking at a entry on Bitcoin with a very tight stop loss. I think it's going to be a very dangerous month, but I think it's going to be a telling month, because if we do bounce in September and head upwards here, it's going to be confirming that bottom, in my belief, confirming it pretty strongly, and we'll see a nice move upwards. Anyway, guys, I think I'm going to wrap the video up there. I don't think I have anything else more to say. I think that's about it. Just a quick summary of everything. 9-year trend line, we're retesting. Retesting that 9-year trend line, very important level to hold. Don't underestimate how important this level is. Regardless if you want the price to go down or if you want the price to go up, just accept the reality that this trend line is important for crypto. It is an important trend line, and losing this trend line is actually quite damaging for the predictability of the macro trend for Bitcoin, okay? Now, zooming back in from there, retesting that 9-year trend line, we can see a bounce. If we lose a 9-year trend line, we are going to potentially go down to about 18 to 19,000. We have a horizontal support zone there. If we lose that support zone, we're heading down to a previous low around 17,664, and that range extends down to 16,000. Losing 16,000 plus a weekly close below the trend line will confirm the loss of the trend line, and we expect to move down to about $13,000 to $12,000 as that target. What is the probability of all this occurring? Well, as of it stands, the trend line is support until it's not, and therefore it has to be treated as support until it is lost, and therefore we do expect the support line to hold, okay? That is all the analysis from me today, guys. I hope everyone's had a fantastic day. Of course, if you're interested in VIP, head over, click the link, join up. We do daily trade signals, analysis, and a whole range of more stuff. We've profited this entire market. This entire way down, we've profited. There's not been a single move we have missed. Not a single move we've missed. We've got every single move. We got this bounce over here, push upwards. We called the top again over here. We got this move down. We caught that bounce, move up. We called the bot. We literally called every single move perfectly. With that being said, guys, we'll catch you in tomorrow's video. I hope everyone has a great day. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want access to futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.